Hello and welcome to KATV India. I'm your host Varsha Venugopal. Big news coming in from the world of finance. India's markets regulator, SEBI, has announced a fresh set of reforms, easing IPO rules, relaxing timelines for public shareholding, creating a smooth gateway for trusted foreign investors, and tightening governance at stock exchanges. These moves come at a time when overseas investors have pulled out nearly $11.7 billion from Indian stocks and debt in 2025. Rising US tariffs, weak earnings, and high valuations have all triggered the outflow. But SEBI's latest reform aimed to restore investor confidence, attract more foreign capital, and make India's markets more inclusive. Let's break this down for you. SEBI has eased minimum dilution norms for companies planning to go public. For companies with a market cap of rupees 1 to 5 lakh crore, the minimum public offer has been revised to at least rupees 6,250 crore and 2.8% of post-issue market cap. Earlier, it was rupees 5,000 crore and 5%. Companies listing with less than 15% public float now get 10 years to meet the mandatory 25% public shareholding rule. If they list with 15% or more than that, they get 5 years. These relaxed timelines will also apply to firms already struggling to comply with existing rules. And the impact encourages large issuers to list and prevents sudden big dilutions in the market. And if we talk about anchor investor, rules have been liberalized. Quota increased to 40% of the IPO issue size, up from 1/3 earlier. Life insurance and pension funds now included in the reserved pool. Mutual funds will still have 1/3 share of the anchor segment. Any shortfall from insurers and pension funds will revert to mutual funds. Minimum allotment size for anchor investor rupees 5 crore. Number of permissible anchor investors expanded within an impact of broadens participation, strengthens IPO credibility, and gives more depth to the book building process. Now, SEBI introduced the Swagat FI framework, a single window system for trusted foreign portfolio investors. Who qualifies? Sovereign wealth funds, central banks, regulated retail funds. What's new 10-year registration and KYC cycle up from 3 years? Exempt from the 50th% aggregate contribution cap on NRIs, OCIs, and resident Indians. And its impact simplifies compliance, attracts more long-term global capital, and positions India as an investment-friendly destination. Along with this, SEBI and market infrastructure institutions launched the India Market Access Portal, provides step-by-step guidance on FPI registration, documentation, and compliance, aimed at reducing confusion and saving time for foreign investors in the mutual fund space. Exit load cap reduced to 3% from 5%. Distributor incentives revised to encourage inflows from smaller cities beyond top 30. New women investors. Distributor can now earn up to 1% of first application amount or rupees 2,000 for new investors from smaller cities. Extra commission available for onboarding women investors with the impact of prompts financial inclusion, boosts participation from untapped markets, and supports gender diversity in investments. And when it comes to REITs and INITs have been reclassified as equity for mutual funds. Expanded definition of a strategic investor. New accredited investor-only schemes launched. Minimum investment for large value funds reduced to Rs 25 crore from Rs 70 crore earlier. The impact is enhances credibility of REITs and INITs attracts more risk capital and supports capital formation. Simplified education and paperwork requires for investment advisors and research analysts. Aims to ease entry barriers and encourage professional growth in the advisory space. SEBI also tightened corporate governance at stock exchanges. Directors must split critical operations like trading, clearing settlement, risk management, and investor grievance redressal. For related party transactions, RPTS introduced a scale-based approval system. For firms with Rs 20,000 crore turnover, approval needed for deals over 10% of turnover. For firms above Rs 40,000 crore turnover, threshold raised from Rs 1,000 crore to Rs 5,000 crore. Low value deals exempt from closure. Impact strengthens governance, increases transparency, while reducing unnecessary burden for smaller transactions. Now, SEBI's reform package touches every corner of the financial market. IPOs, foreign investors, mutual funds, REITs, corporate governance, and investment advisory. The board theme is clear. Easier rules for larger issuers, simplified entry for trusted foreign capital, more incentives for small city and women investors. Tighter governance for stock exchanges. Together, these steps are aimed at making India's capital markets more attractive, credible, and inclusive at a time when global investors are cautious.